Hello and welcome to Kitco Mining's Investment Trends with me, Paul Harris, in which we are going to take a deep dive into Collective Mining, which trades on the New York Stock Exchange and the Toronto Stock Exchange under the ticker CML. Collective is exploring the Guayabales gold copper project in Caldas in Colombia and has risen to a market capitalization of 1.2 billion Canadian pre-resource on a succession of long high-grade drill intercepts. To tell us more is Executive Chair Ari Sussman. Ari, welcome to Kitco.
Hi, Paul, and thank you for having me.
Now, Ari, we're going to go right back to the beginning. So let's start at the beginning. Why Colombia? You've had previous success in Colombia. Why Colombia for Collective Mining?
Well, that's simple. You know, Colombia offers the same geological potential as countries like Ecuador, Chile, and Peru, but due to security concerns, missed that big wave of exploration that took place in LATAM in the 1980s and 90s and early 2000s. So you have a country with the picking still there for big discoveries. It has not been explored. And you've got a country that is the oldest democracy in South America. It's the only democracy that has never had a military coup of any kind in South America. And it's got excellent rule of law and a well-educated workforce. So you put these pieces together and you say, is this a place that we can hopefully make a discovery and explore in? And the answer is a resounding yes. And that is why we came to Colombia.
Now, Guayabales is in the famous Middle Cauca Belt. Over 100 million ounces have been discovered there in the past, 15 years or so. But you're in Caldas rather than Antioquia, which is perhaps the more recognized jurisdiction or state in Colombia for mineral exploration. Why Caldas?
Well, look, I mean, Caldas is maybe the most famous state for mining in Colombia because right next door to us is the famous Marmato mine, right? And for those that don't know, Marmato is the second longest continuously producing gold mine in the Americas. It's been in production for somewhere between 500 and 600 years continuously. That's astounding. And remarkably, no one thought to explore in and around this mine. Our projects, Guayabales and San Antonio, are contiguous or near contiguous to Marmato. So excellent opportunity. And look, I like it, particularly not just because the potential of the geology is robust, but with 500 to 600 years of mining history, at least in modern times, there's a mining culture, right? We're in a state that is comfortable with mining because everybody in this small state has been touched by mining either currently or in their lineage in one way, shape, or form. And as some people know that have visited Caldas, this is a really bustling economic state. I mean, it's although it's small, it's on a per capita basis, it's one of the key drivers of success for Colombia with its very high education rate, its very low crime rate. And so it's a winner place to be. And we were fortunate enough to recognize an opportunity.
Now, you mentioned your next door neighbor with the Marmato mine. That's now operated by Aris Mining. Previously, for the past 10 or 15 years, Gran Colombia Gold was there. Also in the Middle Cauca Belt, we've had Anglo Gold Ashanti, 15, 20 years ago, went up and down that. B2 Gold went up and down that. What did you see at Guayabales and San Antonio that they perhaps missed?
We saw that the host or the engine of both Marmato, in fact, and all the Guayabales project are porphyry systems, but a little bit unusual that the main metal deposition isn't from the early stage porphyry. It's from veins related to porphyries, which are the last events in the sequence of evolution of porphyries. Normally, these veins are poorly formed, in many parts of the world, but they are always there. In this case, they're blanketing everything. And so, we saw the same potential at Guayabales initially as what Marmato is. We first of all, we classified Marmato differently than the predecessor companies to Aris Mining had classified it as. They were calling it a mesothermal epithermal vein system. Well, it's not. It's porphyry veins. And so that meant that the cluster effect would probably be real. Hence, we've proven subsequent that it is. and that most of that porphyry potential lies on our Guayabalis project, not on the Marmato ground. And, that's what's made it so exciting.
Now, the different geological interpretation, that was a key factor at your previous company, Continental Gold, with the Barita discovery you made, 10 or 15 years ago, realizing that wasn't a carbonate, that Barita was a carbonate-based metal system. What was the geological breakthrough that you made at Guayabalis and the Apollo target, which has subsequently resulted in all this drilling success?
Well, look, they are related. So both of them, these carbonate base metal veins that you mentioned, these are porphyry veins. So these are the last pulse of a porphyry system. And, at Continental Gold, we had a very high grade, somewhat discrete vein system that ended up growing to over 11 million ounces in resources. And before we sold it as a mine to Zijin for about 2 billion Canadian. Here, the forms of these veins are different. So instead of having coherent, mineable individual veins, we have sheeted veinlets. The veins themselves are very narrow, millimeters. So they're not profitable as individual units, but they bulk. But this is the same engine. Difference here is we have found evidence of the actual porphyry. The Apollo discovery has a zone within it of a very attractive copper grades. It's not uncommon for us to drill, 300 meters, between 0.3 and 0.6% copper, along with very high grades of gold and silver. So we have that actual porphyry, it's, the original porphyry metal there in places, but all of it's been overprinted by that same late stage engine that Barita had at Continental Gold. So, and look, the only country that I know of, maybe there are others, but the only one I know of geologically that one might compare this type of veining with is Papua New Guinea, right? The famed Porgera mine, which is Barrick Zijin today, discovered way back when by Placer Dome, is a large bulk tonnage porphyry system, but started as a high grade CBM or carbonate base metal, vein system running very high grades, and those went down a long way. Here we are, we come all the way to Colombia. I know they're not related geologically, and we're finding these vein systems. And look, Continental Gold, Barita, those veins apparently, Zijin's drilled down 2.5 kilometers, and they're still in it. We're down now at almost 1.3 to 1.4 kilometers, and we don't see a bottom in sight. We don't even see any change in those veins to indicate they're about to finish or end. So, this is remarkable. And I don't think this is it. I don't think we happen to stumble across the two vein systems with huge vertical dimensions. I'm sure there's going to be more, in Colombia as people explore, and hopefully we'll explore and find more.
Okay, I want to get more into the geology in just a moment, Ari, but first let's get a bit more into the sort of corporate structure of the company. Collective Mining, you've got the same ticker, CNL, that you had with Continental. You've got a lot of the same team on the ground here in Colombia. Presumably that's where sort of Collective comes from, the same collective group of people behind the company. How did you sort of put the initial company together? How did you finance it initially?
Well, okay, we financed it internally, and obviously when you are acquired, as Continental Gold was done, the acquirer generally fires all the higher priced senior employees, especially the ones that aren't local. And so that happened. My key team, my core team had some ideas in other places of Colombia. And very quickly following the sale of Continental Gold, we went right back to work. That was driven by COVID lockdowns, giving us nothing else to do but work. So we went back to work, and we had about 5 ideas in the country, and when we started putting due diligence to them, past just rocks or geology, the 5 narrowed itself down to 1, which was Guayabalis. All the boxes were checked. So we put the band back together, or at least pieces of it. I don't want to say our team is all ex-Continental Gold. It's not. In fact, our geology group is maybe only 30 or 40%, ex-Continental. The rest are new, but we've put together at least a core group and went back to work, and here we are. And, our project, in my mind, ticks all the boxes. Like, when you look at Colombia as a jurisdiction, to go do mining in, it's like every jurisdiction, it has challenges. And so, you build a risk register, and our Guayabalas and San Antonio projects, reduce that risk register massively. We looked at things. Are there forest reserves? The answer is no. Do we have an active indigenous population or an African American population, that's living right on the project to contend with? No, we don't. Is the area pro-business? Is it pro-mining? Yes, it is. Et cetera, et cetera. Government support. Yes. So this really, forced itself upon us in due diligence, and but we were missing one key ingredient: the discovery. I mean, the risk was huge. We put up this capital. You asked where did the money come from? We put it up internally, and this was all. Please.
So that was yourself. That was Pat DeCapo at Power One, who also helped finance you at Continental, and some others.
Yeah, David Redding, who's a chief advisor, Paul Begin, the CFO, Omar Osma, who is the president of the company. And so that capital, was put up internally, and we funded it for a few rounds. We took an enormous amount of risks. Look, most of the Guayabalas project, when we put it together, was not titled for exploration, right? Who knew if it would get titled? We had to go through the process with the government to get it titled so that you could actually drill holes into it. And we took that risk. We negotiated with different owners and put together the land package. And after about a year of drilling, we discovered Apollo, right? And that is what really set the company, on this remarkable path of growth that we've enjoyed since its discovery in mid 2022.
And that discovery hole at Apollo was June 2022. You announced that 87.8 meters, grading 2.49 grams per ton of gold equivalent. So when you hit that at Apollo, what was it, obviously grade and length, but what was it that really jumped out at you that made you think, wow, this is the discovery we've been looking for?
That we had copper. Okay, so although that's reported in gold equivalent, because gold always tends to be the most dominant of the metals in the suite, that we clearly had discovered a copper system in a breccia. Did we understand it? No. That hole, for example, we stopped it in a dike. We thought, oh, maybe we hit the end and got nervous and stopped. If we would have let it continue, it probably would have cut, another 200 or 300 meters of mineralization after a narrow dike. But that is what drove it. And then we saw those late stage porphyry veins or CBM veins overprinting. So, in my career, when you see two or more types of mineralization from different points in time overprinting each other, you have a chance at finding something remarkable and special. And so the first hole gave us that clue. Overprinting CBM veins on top of earlier stage porphyry mineralization. We thought we might be onto something special. Then we had all the questions that anyone would have. Is there any size to this? Did we drill a dike? I mean, could it be big? We had no idea. Only exploration and risk, eventually told us that this proved out to be something special. But that's exciting when you drill that discovery hole. And I hope everyone in this business or an investor gets to be invested in a company when it makes that type of discovery for its first time, because it is exhilarating on the ground.
That was June 2022, as I mentioned. So almost 3 years later, and ever since that first hole in June, you've been putting out a string of high-grade long intercepts at Apollo, expanding in many dimensions. More recently, you've been looking. You've announced the discovery of Apollo Deeps, or something to that extent. The deep portion of it's got depth as well. What does Apollo look like today? How big does it look today?
Well, look. So although it's a breccia hosted unit, it's the breccia has enveloped or filled up where the porphyry was. Okay, so the dimensions are about 600 meters by 400 meters by, believe it or not, close to 1.3 vertical kilometers. And you might say, wow, why is it so much narrower at the top and deeper at the bottom? But in porphyries, you always, or not always, but normally you're looking at a 3 or 4 to 1 ratio between the vertical on the bigger side, and the area or the lateral dimension on the smaller side. So this is quite typical. This thing's growing, and look, the real excitement, of Apollo of late is the discovery of this ramp zone at depth. Okay, so I've been saying this, and I want to iterate it again. This is a new mineral discovery. Although it's continuous at Apollo, we have discovered a new style of fluid at depth, a much more reduced style of fluid than what we see at the top. And so we're just on our first few holes into that. And, it's similar in ways to Marmato Deeps, which is well north of 6 million ounces next door. And they're racing into production on that as they're constructing, hopefully next year. If we get dimensions like Marmato Deeps at anywhere near the grades we've been seeing in the very early drilling, we're going to add a lot, to Apollo in terms of ounces in the system.
Now, last night, you put out another press release. You just reported on a high-grade subzone, which you said was the first of 11 targets of that nature that you're looking to test. What does that do to Apollo?
Grade. I mean, these subzones have the potential to positively improve or raise the grade, of the system in the top 1,000 meters. If there are subzones in ramp, we have no idea at this point because there's almost no drilling. But the top kilometer, we have these targets and they're dilation zones where if sheeted veinlet systems at different orientations come close to intersecting, they fracture the rock and we get a lot of sulfide there. And we only discovered these by realizing we were drilling too much along or down the system versus across it at a true angle. And by drilling across, we're finding these subzones, or at least we found the first one that we tested so far. And the grade's up. I mean, I can't tell you yet how much the grade will improve compared to the model, because that's a detailed exercise that requires quite a bit of drilling, but it is definitely better than what the model predict by a meaningful amount in that first subzone area. And I don't know if we're going to hit on all 11. I doubt it. That would be too good to be true. But if half of these come in, as like subzone 1, we're going to be off to the races, because raising grade means building ounces, right? I mean, your ounces will grow too. It's already going to be a multi-million ounce system. And if we can improve its metrics internally, that's going to help pay dividends when this becomes a mine in the future.
Now, in previous conversations we've had, Ari, you've mentioned the possibility that Apollo could contain 10 million ounces. How close do you think you are to hitting that number? What more do you need to do to get there?
We need to drill more. We're not there yet. Okay. But we're also in our, we can't have a 43-101 estimate. But we're on our way. If you look at analysts covering us and their estimates, they're ranging kind of between 5 and 8 million ounces in their models. But we're open and growing, and so let's drill 2025 and half of 2026, and with some luck, maybe we'll get to that 10 plus million ounce number at Apollo. Let me say this too, Paul. I've always said I want to get to 10 million ounces. When I said that, I didn't think it was going to be only at Apollo. It was Apollo plus trap or Apollo plus something else. But now I think we have a chance at getting there just with Apollo. Obviously, that will be subject to continued success at ramp at depth in particular.
Well, you mentioned trap, so let's bring in some of the other targets you've got at Guayabalas, because, of course, if I remember correctly, Apollo wasn't the first target you were drilling. That wasn't your first choice, was it?
No, because Apollo. So let's back up. There's one major challenge in exploration with this project. You visited the project. I mean, there's almost no outcrop, right? We're not in jungle. This is a good part of Colombia, but there, it's near the equator, and so a mossy cover grows. On just about anything that is exposed. So rock gets covered very easily. And in addition, we're at the top of a mountain in the rolling hills at the top. And so, valleys, typically historically over millions of years have succumbed to landslides and volcanic ash from historical explosions, etc. So there's just not a lot of outcrop. Okay. So the challenge here is you auger with a hand drill through the cover to try and get samples of the actual soil that was there instead of transported material, and you build anomalies that way. So they're blind, like Apollo was a blind discovery. We did have an outcrop. I think it was roughly only 10 square meters in size. So that's tiny. That's like, for the American listeners, 30-ish feet. That's all we had of rock, and it had nice grades. And how would you guess that that was an outcrop to a large, deposit below it. It's just by being tenacious and taking risk and drilling.
Now, you mentioned that the topography and the vegetation makes it a challenge to explore. You've got a relatively young exploration team, young, keen and hungry, and obviously full of energy. That must be a real benefit to working in the terrain where the project is.
Yeah, I always joke, Paul, the only negative of having this topography and a young, in-shape team is they come back very hungry, so our cost to feed them is probably double, other companies that have simple terrain. But look, you need to like working outside and you need to like walking up steep slopes to work for collective mining, and you need to be in shape. Just to give a sense of how difficult it is to explore on surface. Right. I mean, a geologist might get, 9 or 10, maybe 11 or 12 soil samples on any given day. That's it. Right. Because that's how much work it is to get to the next location, to hand auger. They hand auger sometimes as deep as 30 to 40 feet. Right. So that's by hand. That's not with an engine driving it. You're doing that by hand. That's a long way down. This is hard work. They're strong. They're bustling individuals. We have women as well as men that explore, and they're just as good. And and it's been working so far. But everyone's lean and mean, and going to live long lives, hopefully.
And motivated to do that kind of work. You've got to be motivated. Now, you recently expanded this year's drilling campaign to 70,000 meters. How much drilling will that bring you to? And how much have you invested in exploration so far?
Well, look, we've drilled, I believe we're at about 115,000 meters drilled on the project in total, of which 70 some odd thousand has already been drilled at Apollo. The Apollo discovery, the rest elsewhere. This year of the 70, about 50,000 will go into Apollo and 20,000 will be going into new targets. I firmly believe we have a legitimate chance at making one more major discovery this year. Okay. It's a belief. I don't have evidence of it other than we have exciting targets, that are only two-dimensional, meaning they're only on surface. But look, if you've got Marmato, right, which has a mineral resource estimate of close to 9 million ounces of gold, we don't know how many millions were mined historically, and it's open. You've got Apollo 1.75 kilometers away only in a multi-million ounce scenario, and almost no meters of drilling done between them. The odds are good for mining that we will find something, and that's what we're going to push. So we're going to start drilling the ME target, maybe in a week from now, as we press released recently. We see breccia there. That has a chance. Let's see. One of these, I believe X, ME, Tower, one of these is going to hit, I think. I hope I'm right. And as a shareholder, we'll be very happy if we hit on any one of these, because it will really, the imagination of this camp model, right? How many more discoveries could there be will really come to the forefront of the mind.
Well, talking about a camp, let's bring in your neighbor Aris Mining again. Aris is building a deep underground mine at Marmato. That's going to produce 200,000 ounces a year. It's spending about $290 million to develop that. Its ounces, 5 to 10 million ounces. So together you're looking at it's potentially a 20 plus million ounce district. You show in your corporate presentation a cross section showing the proximity of your Apollo ramp zone to the Marmato portal. How close are you in reality?
Just less than 2 kilometers. Like that is, so call it 2 kilometers, right? Give or take. So it's very close. It's something that if one wanted to in the future could connect, underground. It wouldn't be that difficult. It would take, I don't know, maybe 18 months of in a straight line, of the underground development to do so. But and what's in between? Look, camp. I think without question, there's going to be more than 40 million ounces of gold or gold equivalent. 40. Okay. Now I say that number. Okay. But let me put a caution on that. Okay. Not all of that, or not even a lot of that, will be able to be extracted economically, right? Not everything is economic that you find, right? But this is a giant system. Okay. It is big. It is world class. there will be a lot more ounces found here. Will it be continuous? Will it be economic to extract? Those are things that will come in time, and so our goal, at least for the short term, is try and make that next discovery as we expand Apollo, to start that imagination, let that imagination run wild, and who knows, maybe we'll find something, another economic thing too, not just ounces, but economic ounces.
I mean, does it make sense for Apollo to become an extension to Marmato, or is it something that's perhaps best developed yourselves? I mean, your market capitalization is far in excess of that of Aris Mining at the moment.
Well, that's a good question. Look, Marmato is in construction. As we speak, its infrastructure is right next to a town. We don't have that population on our ground. We don't have a town based on historic mining, anything like that on our town. So, maybe one might argue that it would make sense in the future for Marmato's rock or Marmato's deposit to be pulled our way, and out into some plant that we or someone else, if they acquire us, builds wherever it may be, because it would be away from a town. So, but it's an interesting proposition. There's no question. And although Marmato, I mean, the viewers should know, although Marmato's in production today, it's only been producing for Aris and its predecessors as a very small mine of give or take 20 to 25,000 ounces a year, and not very profitable. What's being constructed, which is supposed to pour its first gold next year, is a formal, as you mentioned, 200,000 ounce per annum mine. And that will change the landscape of what that looks like, right? We're going from archaic, to modern times and things done well. And I know it's an interesting proposition. It's not something I have any plans or aspirations to do at this point, but sure.
Well, let's dig a little bit deeper into that, because there's another player present in this, and that's Agnico Eagle Mines. They're a strategic investor in Collective Mining, and they recently invested more, exercised warrants, and put in more investment, totaling 63.4 million Canadian. How much does Agnico own now of Collective?
They're at 14.99%, and we are thrilled to have them as a shareholder. They've invested in my company, Continental Gold, previously as a sub 10% shareholder, and now they're a publicly disclosed large shareholder in us. They're excellent. I mean, this is the largest gold company in the Western Hemisphere by market cap. So we have the best, at least the best performing company, as a shareholder. And what strikes me about Agnico is, although their market cap is I don't know exactly what it is, Paul, but maybe it's 60 to 70 billion, something like that. At this point, maybe it's more than 70 billion. It's big. They still have a culture of a small company like ourselves. They've done a wonderful job maintaining, that tight-knit family culture, and that meshes really well as a shareholder with our team, because really we do consider ourselves a family first, and a family that's fortunate enough to work together to have a spectacular asset to develop and push forward. So, excellent, and if you want to bring this back to Marmato, I have no crystal ball on Agnico or anyone else for that matter will ever buy, us, but definitely any large company might think about what the combined production looks like, because, right now, you don't have a large Western company in gold, specifically producing in Colombia. You have it in base metals, as you know. We have it with Glencore's operating the world's largest coal mine in the country. We've got South32 operating, I think it's the 5th largest nickel mine in the world in the country. So you have production, but in the gold side, someone that comes into Colombia, whether it be Agnico or anybody else, is going to say to themselves, if we plant our roots here, do we see this as a cornerstone asset that can produce potentially for 20 plus years, and therefore give us the opportunity to then spread our wings, in Colombia and find new opportunities and grow a business here? Because it is a big step to go into a new country, for any company, right? It doesn't matter if it's mining. So I think we alone offer that potential, the long life, large production scenario, and obviously Aris mining with Marmato would better that even further.
Okay, so Agnico's got a $63 million market cap at the moment. Now, at Buriticá, you build a 200,000 ounce per year mine. Zijin's now producing over 300,000 ounces a year from that, I believe. What's the potential production profile of Apollo and Guayabalis? 200,000 plus?
Yeah. I mean, look. I've openly stated our goal is to demonstrate in the future a mine that can produce at 300,000 plus. Right, 300,000 ounces plus is the number that gets you into the wheelhouse of the largest gold companies, right, of what they're looking for. Now, that's not necessarily true on all metrics. It also is, what are the margins of a mine, right? If you have poor margins, in 300,000 ounces of your production, but 200,000 ounce producer has wide margins, that might be better. But, all things being equal on a cost basis, that's kind of the metric that gets you into where these big companies like. And given the bulk tonnage nature of the system, we think we have a chance. And look, if Trap becomes mineable, which I believe it will be in the future, obviously we got to drill a lot more and study. What if we find that ME? What if we find that X? Any of these other things, that number could get bigger. And look, do I think, from what we understand today, that Apollo, if we could wave a wand and say produce today, would we cut a ribbon and it'd be 300,000 or 400,000 ounces day one? No, right? It'd be a scenario where you start smaller and you ramp it, as your development comes in, because most of Apollo will be mined from underground. Right, that's the topography. Speaking, no other reason. I don't think we'll have anything other than a small open pit based on the topography. So mainly underground, and so you ramp these things up. But what's amazing in the mining business, Paul? All big companies seem to say, "Oh, we want to have these huge ounces." But when you look at the history of mining in the world's largest mines, like take Goldstrike, in Nevada, for an example, which at its peak was more than 2 million ounces of gold produced per annum, it started as a 1,000 ton per day mine producing very small, and it ramped up bigger every single year for at least 10 years straight. And so, that it might be the better strategy that the industry needs to go back to, because these big, large, low grade projects that we see people developing, they seem to have enormous problems in the first 3 years. And so was it worth it? And the dilution and the extra capital needed versus starting maybe half the size and ramping up and mitigating those problems out of the gate without having them. I don't know.
So you raised 63 million from Agnico early this year, and that sort of brought your treasury up to what, 70, 80 million. How much money have you raised to date in total, do you think?
Good question. We got to be getting close to 150 million. Give or take, US, and and we're very well financed. I mean, we've got, as you alluded, we have about $75 to $80 million US, in the treasury as we speak today. So we're well funded for this year and probably all next year, depending on how much we can drill.
I want to go back to something you said right at the start of our conversation, Ari, and that was the copper. When you saw the copper, you knew it was something different. So Guayabalis is not just gold. You have the copper. You also have tungsten, a metal that has very much been in the news this year due to China restricting exports. What is the opportunity, if I can phrase it like that having the red metal provides to the project and its potential future?
Look, it's big, and I think all things being equal, this may be the first copper producer in Colombia, and it's the first evidence of tungsten ever being discovered that I'm aware of in Colombia. And the nice thing about the copper and tungsten, well, let's start with the tungsten. The tungsten exists only in the top 100 to 150 meters of the deposit, so that means it's going to come out right away. Right. So this isn't a long-term opportunity to get tungsten into the Western market. It's a shorter term, opportunity. The copper starts right below the oxide zone. So about 30 or 40 meters from the top. It doesn't go down all the way. It goes down about 300 vertical meters. So it's also going to come out early in the mine life. So these are nice things, to have, not just for the global critical mineral race, but for Colombia, which is just getting its feet wet, in the non-gold, non-coal production end of the business, and we'll be right at the forefront of that.
A lot of juniors say they've got a sniff of, critical mineral X, critical mineral Y. What sort of concentrations of the tungsten and copper do you have? Are they potentially economic?
Yeah, well, look. I mean, so go by drill holes. Okay, so we put out a press release, and I think it was late 2023 on tungsten, where we said here's the portion of the drill holes where the tungsten is found. So the top 150 meters, and here is the weighted average, of those intercepts, and it came out to 0.29% tungsten. That is a byproduct, okay, obviously of gold. Well, the price of tungsten, last I checked, trades at about 3 to 4 times the price of copper. So even assuming poor recoveries, we think we're going to get 70 to 75% recoveries on tungsten, which is standard. That's worth maybe close to 0.9 to 1% copper equivalent, including recoveries. That's really attractive. Remember, the world tungsten market isn't big either, right? So I don't think you're going to see too many primary tungsten mines get put into production, but as a byproduct, a few million tons of it will be attractive. Now, the copper, we drill where the copper exists, in that zone over about 400 vertical meters. Very nice grades, as a byproduct to the gold and silver. I mean, it's not uncommon for us to drill 300 meters at, attractive gold grade silver plus maybe 0.4, 0.5% copper. We're going to have where the copper exists, we're going to make a beautiful copper concentrate. It doesn't have any challenges with impurities. This is key. So deleterious elements are below problem levels. Awesome. The concentrate will be 22 to 26% copper. It will have a very high, unusually high precious metal content to it, particularly silver. So we'll be selling a concentrate running, as I mentioned, 22 to 26% copper. It will be north of 1,000 grams per ton silver and probably somewhere between 30 and 60 grams per ton gold. Very attractive. Will be in high demand. The smelters will like the precious metal attachment to it as well.
So 0.4, 0.5% copper, that's about production grade from Chile's primary copper mines. So that sounds like it's a very good byproduct or subproduct there. Let's talk about metallurgy. It sounds like you've done quite a bit of work. What have you done so far, and what more have you got planned to do?
So I would classify the top 1,000 meters of the Apollo system at PEA level completed metallurgy, preliminary economic assessment completed metallurgy. So really, what does that mean? That means that the next step would be bulk sampling, and we're not going to do that today. The good news is there's no metallurgical challenges with the top 1,000 meters of Apollo. You're going to make 2 products. Where copper is economic or above cutoff grade, you're going to make a concentrate, and where it is below cutoff, you're going to go to gold and silver doré bars. Okay, all with standard processing techniques. Amazing. The next steps in the metallurgical journey are to start to do some work on the new ramp zone discovery. We haven't done any yet. The only thing we've done at this point, we just got back our mineral characterization work, where you do chem scan thin section work under powerful microscopes to identify what the minerals are. Obviously, I don't know what the metallurgy will be, but I'm optimistic it will be great, given that we have a similar suite to Marmato Deeps, and they're in construction on a mine with a proven mill. So I don't expect we'll have any challenges, but that's the next step, at Apollo. The other thing that's happening is early metallurgical work at Trap is just about to start. So we'll learn more about that too. Again, similar veins to what we see, overprinting Apollo. So I'm not that worried about it, but we need to do the work to say it's safe.
Now let's talk a little bit about Colombia, Ari. A number of people view Colombia as a risky jurisdiction, but you successfully permitted Buritica several years ago. Your neighbor successfully permitted the Marmatos Deep mine development. You mentioned earlier in this conversation that you managed to convert concession applications into concession permits, or exploration permits. So this all indicates that Colombia is not as anti-mining as perhaps some people think. How do you see the government's role and relationship with mining? How do you see the permitting process in Colombia as you're going forward and looking at taking more, the bigger future steps?
So I hear this all the time, there's political risk in Colombia, and my answer to that is always define political risk for me, please. Normally, most people look at me dumbfounded and say, well, can you do it? And I say, okay. So political risk is a few components, right? Number one, are titles safe? Okay. There has never been an example of the government of Colombia expropriating a title. That's due to the fact that it's the oldest democracy in South America. Second, is mining law? Yes or no? The answer in Colombia is a resounding yes. Why is that important? Because as law, for the mining law to change, it would have to go through a procedural process involving, in Colombia's case, Congress, Senate, and a constitutional court. That you can't just haphazardly change the law. If you're in a country where mining is not law, you need to then go to the national government on a mine-by-mine level and say, hey, what are we going to pay in taxes and royalty? You may cut a wonderful deal with that said government, but we know the risk of that. Governments change, and if that's the case, the government can then easily change your royalty rate, your tax rate, or in a worst case scenario, do what Panama did that does not have mining law and shut it down. Okay, so Colombia checks that box. Thirdly, the procedure related to the law in Colombia is key for mining. So we don't need to pretend that this current government is pro-mining. I mean, it's not that they're anti-mining, but they're very green energy driven. So they're anti-coal and anti-oil and gas. And they ran on a premise of, hey, we don't want any more new licenses for oil and gas and coal. Well, guess what happened? It was stopped by the procedural courts and by the Congress in Colombia, and those are flowing fine. And in fact, there have been 8 licenses for mining issued under this current administration, which I'm sure those that follow Colombia know is in its final year before there will be a government change, which we're all thinking is going to swing to the right and more pro-business. So everything works in Colombia. And one last point to add, on political risk is, I think this may be the biggest one after points 1 and 2. Point 3 is, what is the timeline to permit? Okay. And although there isn't a set timeline, in law, there are timelines on the steps, in the law. And when you add them up, it's roughly 10 months in Colombia. So how does that fare against Canada at, I think it's about 8 to 10 years now? And maybe it's going to change under the new Trump government in the US, but, up until now, it was, I think, 18 to 20 years to permit. So this is quite attractive. Now, your risk in Colombia, as you know, it is not everywhere is safe. You have a security risk. So be in areas that are safe. The Caldas department, the state we're in, is the safest place in the country. None of those bad actors operate here in any way, shape, or form. And so you know where to go, stay out of areas that might be challenging from a security perspective, and you can do very well and move quickly in Colombia.
Now, the current government did try to reform the mining law, the mining code, but that got rebuffed. You've answered a lot of my sort of questions that I was going to come up or face you with about indigenous communities, environmentally sensitive areas. You answered those earlier in the conversations. What about illegal miners? Buritica is besieged by illegal miners or criminal miners, depending on how you want to describe them. You've got high grade, but not crazy high grade like Buritica has. Is this a potential risk for Collective and Guayabales and Apollo in the future?
So we identified it when we moved into the area as one of our top 3 risks in our risk register. Okay. And fortunately, the geology itself isn't conducive on our project, at least in the areas we've explored, for that style of illegal mining. Why? I mentioned at the beginning that instead of having wider, coherent, high-grade veins, we have sheeted veinlets. So even as artisanals mine with little dilution, they still get dilution. The individual veinlet grades are not that attractive to spit off a lot of cash flow for small scale miners. So geologically, it's sort of self-protecting. Apollo itself, though, is more interesting because it's hosted in a breccia, which looks like a jigsaw puzzle. So although I've been alluding to overprinting porphyry veins or CBM veins, when those veins hit the breccia, their metal dumps out into a matrix. Why am I bringing this up, and why is this important in regards to illegal mining? For illegal mining to operate, it needs to see a coherent structure that it can chip along. So a vein, right? It needs to see a quartz vein or a carbonate vein with its eye and follow it, right? There's nothing to follow in Apollo, right? And so it's not like there's assay labs set up for artisanal mining. And now, with all that said, you brought up illegal or criminal mining. That doesn't even exist in our area at all. I mean, Marmato, has a large artisanal component on top of it, as it's been producing for more than 500 years. But that is all mom and pop style operators. The criminal element does not exist in this state, and that's due to a couple of factors. But the primary one is that the education level is high and the unemployment rate is low. And for criminality to succeed, it needs to thrive on poverty, and that really is not a lot of that in this area.
I mean, that's obviously a big positive, Ari. So what would you say is your biggest risk factor?
Well, the biggest risk factor is this. I mean, we came into an area with population. Okay, Colombia is like Peru. Okay, you're going to develop mines generally in areas where there's towns or villages or whatever. And so the nice thing is we came in with an area that already had a social license that was pro-mining. Maintaining it is the key risk. Okay, make sure that we're transparent, that we have buy-in with what we're doing, and that we have the support that we need to succeed. That is always the key risk. We spend as much effort, on that as we do in the exploration end of this business. And those two drivers together are what allows mines to be built.
Okay, now, as I mentioned at the start, this is going to be the first in a series of Investment Trends videos featuring Collective Mining. We're going to follow some of the company's key news items as the year progresses. So, Ari, as 2025 continues, what are some of the key milestones or highlights we can expect to see from the company this year?
Drill, baby, drill. Okay, so this is the driver of our success. Look, so Apollo is going to be pounded, both in expansion and subzone drilling throughout the rest of the year. But, let's see if we can make that new discovery at Tower, ME, or X. I particularly like X the most, or somewhere between the boundary of the Marmato mine, their title, Aris Mining's title, and ours. We don't have names for targets there, but I'd like to systematically kind of step out and close that gap with some drilling. Maybe we'll find something there. So new discovery there. The wild card in the equation, which we haven't mentioned, is our San Antonio project. We are drilling there very early stage. Let me caveat it right now, but very early stage for a copper gold porphyry system. We like the look of that area, and that's going to see drilling this year. It's already being drilled, and I think we're going to expand it because the rocks look interesting. I don't want anyone to think we've made a discovery yet. We really haven't yet, but we're seeing all the smoke that one needs to see to indicate we're close to a porphyry, and let's hope we find it, and let's hope it has the kind of tonnage and scale that we would want and grade.
I think PH will be a great name for a new target, Ari. There's obviously going to be a lot more to come from Collective Mining this year, and we're going to follow that with our Investment Trends video series. So, Ari Sussman, thank you very much for joining us today.
Thank you, Paul, and thanks to the team for doing this, and I look forward to our next conversation.
And of course, don't forget to hit that subscribe button so you can see all the other videos coming out on Collective Mining as part of this Investment Trends series. And I'm Paul Harris, and this is Kitco Mining.